What's going on, guys? So we're right here in sunny Miami Beach, chilling. My trade is going good. So I entered a trade on USD last night, and it's going really, really good right now. So I'm gonna show you a little bit about what we're working with here. So this is the trade right here. Literally, we have bearish market structure. Beautiful, beautiful setup. So yeah, I'm gonna update you guys with how the trade goes, but everything's good, life is good.
Calculated like 10 years.
They should just give a ticket.
Yeah, man.
A ticket would have been better.
Like
We could just pay the ticket, it doesn't matter, but
Yeah.
no, of course these people towed the fucking car. Today was the craziest day. So the good thing is that we're in this trade on USD and we're actually running pretty good in profit. I spent all day trying to recover my car. I parked it in Miami Beach and South Beach. I don't know if you guys know, but they're the biggest scammers in the whole city of Miami. Like they'll literally take your car. It was there for 5 minutes in a towing zone, like in a loading zone. I had to pay $500 to get it out. So it is what it is. It's only money. That's why you have to understand that these things are going to happen to you. You can't let it affect your mindset. I can't let it affect the way that I view this trade. I have to just understand like, okay, whatever the market's gonna do, the market's gonna do. I don't even care about the money. I just care about the time. It's just these type of things are going to happen a lot. You have to let it fly by. So I wanted to talk to you guys today about a concept that I was talking about on my story, your attachment to money. You can't become too attached to the money because the more you care about it, the less you get. Let's say like you're in my shoes, you lost, $500 or you lose a $5,000 trade, which happens very often. You can't become upset about that because if you do, you won't be able to handle the winning part also. So your attachment to money is directly correlated to how much money you can actually make.
Yeah, about trading, I think that also is about mindset because if you care too much,
It's literally all mindset. It doesn't really matter what strategy you use. If your mindset's not there, you're not gonna make money. So let me give you an example. Let's say you have a really good trading strategy and you take a trade. So it'll go a little bit in drawdown, then it'll go back in profit, maybe it'll pull back into drawdown one more time. If you don't have the right mindset, you close out of that trade early. So you're gonna close out at a loss, and then you're going to regret it because after you close out, the market's going to go in your favor. The market's run by emotions and by psychology. So until you get your psychology down, you're not going to make results. It doesn't matter what strategy you use. I can give you right now the best strategy in the world, but if you don't have the mindset to go along with it, it's useless. The trade ended up hitting take profit last night. Beautiful, beautiful trade. So let me go ahead and show you the trade. As you see, we actually ended up making, what does it say right here? $22,935, so almost $23,000 on this trade. Last week, I also killed USD. So let's actually just go ahead and get on the charts so I can break down exactly why I took this trade. All right, guys, so now we're on the charts, my favorite part about the analysis. I really, really, really love this trade right here. I love how it played out. I love how we analyzed and I spotted the market structure shifting to the downside. And I caught this beautiful, beautiful trade. I really like this setup right here because I've traded similar setups to this one right here so many times and it always works out good for me. So we're going to start off on the higher time frames. I'm going to break down from top down analysis why it is that I took this trade, how you could have caught it, and how you can catch similar trades like these in the markets. So let's start off on the weekly time frame. So on the weekly time frame, a lot of people were saying that the market was bullish because it's true, you had some bullish candles. But on the weekly, at the end of the day, if you still look at this high right here relative to this high, it is a lower high. So that's one thing that we can take into consideration. Now we're going to go down into the daily time frame. So on the daily time frame, this is the main time frame where I spotted the structure shifting. So we were bullish for a very long time. And we can see that we were bullish because we have higher lows and higher highs being formed. Right here, higher low, higher high, higher low, higher low. But all of a sudden, once we reach this point up here in the market, this is now not a higher high anymore. This is a lower high. So once we get this lower high, then we come down here and we form this level of support. So we've established that the market was going bullish and then the market stopped forming higher highs. At that point, we formed a strong level of support here.
The reason why I say it's a strong zone, it's because we have all of these wicks right here. All of these wicks showing that price has rejected that area multiple times. So it's pretty simple. If price has rejected an area multiple times, then that's a strong zone. And if price breaks that zone, then you can expect price to continue strongly in one direction. And that's exactly what started happening. So I spotted that the market was starting to trade below all of these wicks. Once the market starts trading below all of these wicks, I'm now officially starting to look for sells. So I go down into the 4-hour time frame to confirm the change in the market structure. And what I see is nice confirmations. And I'll go over those confirmations right now. The first confirmation that I see here is the lower high point relative to this one. This was like the main indication. Then we have a low and a lower low. So we have lower lows and lower highs. Then we formed another lower high, not a lower low here yet, but what we're trading is the expectation of the new lower low. So now we have to actually go into the smaller time frames to see more detail, because as you see on the 4-hour, this is choppy. You cannot really take a trade here on the 4-hour time frame. That's why for my strategy, you have to go down into the 2-hour or the 1-hour time frame, sometimes even the 30-minute time frame, to find a precise entry point. So in this case, we're going to go down into the 1-hour time frame to see price action more clearly and to find a trade. What we see here on the 1-hour is a beautiful moving average coming down. You want to see the moving average going down in a bearish trend, and ideally price is trading below the moving average and it's slanting down. That's exactly what happened here. So once I saw that the market broke down below this support, which by the way, you can see multiple taps of this area. You can see right here, price used it as support, price used it again as support, and again here. So it's a very, very strong zone, because then price used it as resistance here, used it again as a mini resistance here and then broke it, used it again as resistance. And then that's when I spotted this bearish confirmation candlestick right here, because this bearish candle rejected the moving average perfectly. It left a big wick to the top side, giving us a nice area to enter. So shortly after I saw that rejection bearish candle, I decided to enter. Real quick, let me go down into the 30-minute time frame. We also, this is another key point, we also have another confirmation here on the 30-minute, which is actually a bearish engulfing right here. I entered on this candle because the volume of the candle also showed that most likely it was actually going to engulf the previous candle. So you can add that to the list of confluences. Once you add all of this up and you realize that price is rejecting the moving average beautifully, and we have the weekly, the daily, and the 4-hour time frame, which are the higher time frames in our favor, showing us that the market is most likely going to start going down, that's when you can take this trade with a lot of confidence. So as price starts going in profit, I actually used to have a smaller take profit for like a nice 1-to-2 risk to reward ratio. But once I saw the potential of this movement, I decided to let my trade run even more, because I know that when the market picks a direction like this, and when you're trading with the trend, when you're riding the wave of the market will keep on going and you can actually catch a way, way bigger trade. So that's why I actually extended my take profit down to 600, 152.600, 620 is when I got out. That's how I was able to catch a way bigger move. And I was only risking on this trade between $7,000 to $8,000, and I made about $23,000. So that's over a 1-to-3 risk to reward ratio, and that's after fees, after everything that the brokerage takes, after spread, and you still catch a very beautiful trade. So that's a little insight into my strategy and the way that I trade. So just leave a comment if you want to see more videos like this, and I'll see you in the next one.